Hi, everybody, and thank you for having me. It's always great to connect with like-minded colleagues, and obviously, just thankful to OFN for bringing these issues to light and sharing some of our thoughts and our experience in this area. So, the Solar and Energy Loan Fund is a Florida-based CDFI, also known as a green bank. Sorry, next slide, please. And we were created in 2009 with a Department of Energy grant that was seeking to create innovative financing models around the nation to address energy efficiency. Now, it's interesting because at the time, 10 years ago, the talk was really all about energy and efficiency. There was no talk about resiliency. That has changed, thankfully. But really, the purpose was when Self was founded was to create jobs in the green industry, and also to make the clean energy economy benefits inclusive, accessible, and equitable, meaning that everybody should participate in the benefits of what the clean energy economy brings: energy savings, insurance savings, increased resilience to climate change, carbon reductions, etc. So Self really started off as a pilot, as a energy efficiency revolving loan fund, and then we quickly evolved into a triple bottom line impact model, focusing on advancing social, environmental, and economic justice for low and moderate income and BIPOC residents. I think that one of the innovations that we had was to use the CDFI model, which typically is addressing affordable housing issues and community development, and kind of push it into or use it to bring financing with this vision to LMI communities, in addition to just affordable housing. And it's wonderful to see a wave now of other CDFIs try to enter the space and do more of this with us, because the problem is big. So we basically focus on providing low-cost capital for affordable, resilient, healthy, low-carbon homes. Next, please. So basically, we have loan programs for homeowners. We do direct lending, small loans for they're unsecured loans for single family and multifamily dwellings. Now, what do we mean by this? Basically a microloan, but it comes coupled with project management through a contractor network that has been pre-approved and pre-vetted, and also ensures that we are helping people rebuild credit. Our loans are not based on credit scores, they're based on ability to repay. So we have clients with 0 credit scores, and we have special programs for those who have 500 credit scores or less. We do pull credit because it's important to help people advance in the financial inclusion piece, but we don't decide based on credit scores. We have another program that we just launched in Georgia with the Atlanta Housing Authority. We're really excited about this program because we're trying to address the renter, affordable housing rental issue. Again, a whole different set of problems. How basically the big question of the split incentive issue is, how do you motivate landlords that already receive X amount of, of money through the voucher system? How do you motivate them to make investments that are going to increase resilience, reduce energy costs, and benefit the low-income renter, freeing up cash for them to invest in other much-needed things? And that's something I'm going to touch on very briefly later. And then we have a third product that we're developing, we're just piloting right now, which is gap financing for developers. And what we found is that developers still have the mentality that resiliency and energy efficiency and clean energy is an added cost. It's not perceived as, oh, this is an added value that we need to incorporate because it's going to benefit us. Basically eats into their bottom line. So so we are piloting a new development, a new loan to address this gap funding and to participate in capital stacks with other lenders such as Enterprise and many more that can bring together this capital stack and include kind of provisions in the loan, low cost loans, to include resiliency. So if the developer is thinking, well, this is too expensive, I can't incorporate it, it eats into my bottom line. Private equity typically would be 14 to 16%. Well, we'll offer a gap funding mechanism for you to access capital at half the cost that you would in the private capital. And that way you can now add and incorporate resiliency and energy efficiency. Next, please. So those are basically the three items, the three programs that we have, sorry. And this is kind of a picture of a house that shows everything that we're able to finance. So Self went from focusing on energy efficiency to really embracing resiliency, because especially in low and moderate income communities, and we're talking about, Lori mentioned, we're talking about working class America, those people that kept us going during COVID. What we saw is that they needed very basic home repairs. We use fancy words like climate resilience and this and that, but basically it is a roof, a roof that's fortified. It's a home that can withstand hurricane grade winds, that it's a home that is affordable to operate. What is an affordable house? It's not just affordability to pay rent, or just affordability in terms of getting into, or the purchase price. Affordability really relates to the operating costs in the long term of that home. So we are addressing everything that can reduce operating costs, energy efficiency, water conservation, even disability and aging in place adaptations. Next, please. So I mentioned that we have financial inclusion, project management, and pre-vetted contractor network. Very important for low-income communities to know that they are protected. So we check pricing and we ensure that everything meets code. Next, please. So we also customize programs, and this is a very important piece of, I think, solving the issue of affordable housing, is that we have to work in these public-private partnerships. And Lori is an expert at this. Enterprise is created this wonderful tool that she talked about, and I think that she's going to dive into a little bit more, but we need to work together. We need to take the expertise that others have, and especially we need to work with local governments, because we become implementation tools. We'll bring capital to the table to help address these issues, but we can't do it all. Nobody can do it all. So we need the education piece, we need the tools, we need the multiple capital providers, and CDFIs, of course, fill a huge, huge gap in the financing, and CDFIs need to get into this space too to address the affordable housing crisis. Next, please. So I'm just going to go through these slides very quickly. These are just examples of programs that we've created with public partnerships. Can you go through the pictures, and I'll just mention them. This is a new program with the Atlanta Housing for, it's a loan for landlords. Next, please. And I want to pause right here, because this is a really good example of a solar resiliency project that we did in Miami, that we're doing actually in Miami-Dade County. Basically, we were able to raise foundation funds. The people in the picture, Mayor Cava and the two gentlemen, are from the Low and Seed Foundation. And we brought funding to put a solar rooftop PV system on a public housing building with 103 Latino low-income elderly residents as an emergency response. We didn't intend or pretend to have the capital to be able to solarize every unit. Unfortunately, that is very expensive and may be hard to come up with a capital. But what we did was we thought of resiliency. When a storm hits and the power goes out in Miami, elderly people are up in a fourth floor, lose their power. They go out to these open hallways, and how do they get out of there safely in shelter? So what we did is we solarized all the public access points, the emergency access points. We also are solarizing the elevator shaft, and they have a big admin office where they keep their medication. So the health component is something that also we sometimes kind of skip over. But resiliency also includes, being able to retain your health. So what we did is we put this solar system so that it can power up these critical areas, and people can be protected. So you see here on the left-hand side, I kind of circled where it says Gibson Plaza. This is the Gibson Plaza. We're solarizing. We're putting solar on the roof, and Miami-Dade has actually leveraged those funds and invested in a solar-ready roof. And now Mayor Cava says that she wants to replicate this in every public housing building. So we're going to need to come up with more capital. But that's just an example of a solar resiliency project. Next. So again, we have this gap funding, and I want to be mindful of the time. So I want to go quickly through these slides, if you don't mind, to the next one. And I just want to stop at this picture because a picture says, 1,000 words. This is an example of one of our clients who the roof was leaking. She has right there in the picture 4, but it's actually 6 children she takes care of, her sister's children. She's a cancer survivor and veteran, and her roof was caving in. She had buckets all over the house. This is the only asset she owns. She works hard. She has a cleaning company, and no one will give her a loan to fix her roof because she doesn't have credit. She has 600 credit score. So she came to Self, and we were able to give her a loan to repair her roof. That then allowed her to gain insurance for her home. That then allowed her to obviously have a much better quality of life. So I think I'm going to stop right there and hand it over because my time is up, and we'll get into impacts and capital later. But just as summary, Self has done over 2,500 loans, deployed $20 million for low and moderate income homeowners. 74% are low and moderate income homeowners. We do unsecured lending, and we have less than 2% default rate. So those markets are very creditworthy. Thank you.